Hi everyone, it's Marita from Immigration Biz. Thank you so much guys for tuning in. Today we have a very special interview here with CPA expert, tax planning expert, entrepreneur business owner, Ronica Brown. Thank you so much for being here.
Thank you, thank you, thank you. Always lovely to talk to you.
Likewise. So what I really want to talk about today is a topic that I personally hate because I have no idea what's going on in this world. Yes. Tax planning, taxes, tax returns for entrepreneurs, business owners, and there are so many people in my audience who really want to learn more. So why don't we start with the main difference, I guess. What's the difference between tax planning and just a regular tax filing? Because you are expert in tax planning, right?
Yes, yes, yes. And I'll say that, quick before I answer that question, that, a lot of people, that's one of the things that I get, like, oh, I hate taxes and so forth. But I think that, if we, as, tax professionals can make it simple, and that's something that I work on, so that people can understand. So I think that, one of the mindset thing that I want to share with business owners is like, think about your taxes as something that to help you make or keep more money. So which one of those are your like thing that pumps you up? You can think about taxes as that. And the reason why I say this is because, so for instance, if you're making $100,000 in your business and all of that money goes in your pocket, if you don't have to pay that in taxes, that all of that money, goes into your pocket. So it's basically.
Is that even legal? Like, is it even? I don't think it's legal. I am CPA who is advising not to pay taxes. I mean, I'm just joking.
No, not really. But I guess the real point is that the less you pay in taxes, the more money that you have going into your pocket. So that's why you should more think about taxes as a way to help you to keep more money in your pocket rather than this dreadful, like, you don't need to know all the code section and all that foolishness. I mean, I take care of that.
You, so they don't need to do it themselves.
Exactly. All you need to know are what are some of the things that you need to look out for to make sure that you're truly saving money. And the only way to save is through tax filing. And you ask, what's the difference?
Yeah, what's the difference?
Tax filing is just submitting the forms to the IRS. That's all it is. So someone is going to go through something that you've already done last year. Say, for instance, 2018. Whatever you already done in 2018 is already set in stone. So a lot of times there's not a lot you can do to change what you've already done. Does that make sense?
Makes sense.
So when you come to filing your return, they're just making sure that they put what you've already done on a form that reported correctly to the IRS. That's all tax filing does, to making sure that things are reported correctly to the IRS.
Got it.
Tax planning does is it looks and say, hey, you're in business. Your business is making, X amount of money. You travel, you have children, you have this. How can we build a strategy that you can maximize the deduction around all of these? Your children, is there a way that we can hire your children in your business and for you to shift income out of your business and don't pay taxes on it? Is there a way that some of these personal trips can get converted into business trips? What are some of the steps to do so? So, what a lot of people do is they do a bunch of illegal stuff. Like they'll go ahead and pay their children, prep school or private school tuition from their bank account. They'll go ahead and go on these lavish trips that are not business, they're personal, and call them business. But the thing is, there are correct ways to do it so that when they come knocking, you're good.
Yeah, exactly.
People that they just want to, and it's like they convince themselves that everything is business, but actually it's the IRS you have to convince. So there are legal ways to get the maximum deductions, and there are illegal bullshit. And there's a bunch of
we understand the message.
There's illegal crap that people do to get them in trouble. And why I say that is because people come to me of the time when they're already dig themselves, 6 foot deep in a hole, and it's like, why the hell on earth would you do that?
Right, totally. I mean, totally. Now I understand. So the tax filing is just the top of the cherry on the cake, and the cake itself is the tax planning. So you need to make sure that cake is baked in a proper way so you can then eat it.
I love that.
And you don't want to get sick when you eat the cake.
Exactly. So it's, what are some of the things that in your lifestyle that we can plan around legally?
Legally, of course. We are all legal here. We are legal CPA and attorney. So I love that. Now, who do you work with, by the way? I know you work with entrepreneurs and business owners, but is there any specific income minimum that you need to work with, or you work with someone who is making, I don't know, whatever, $20,000 a year?
I honestly don't have a minimum. If they're willing to pay my fee to help them develop a strategy, if there's a strategy.
Yeah, gotcha.
I will help them. So normally, I go through a process where I look to see what's going on, and if it does, because sometimes, the best tax planning is no planning. So if it doesn't make sense for that person, then we're not going to do planning. I can just tell them that, these are some of the basic things that, you need to do. And, once, these things, start happening in your business, then we can revisit. Because sometimes, the numbers just have to make sense. And that's why, if someone is doing tax planning for you, they show you the numbers of, how much you're saving and so forth, because the numbers has to work out for it. You have to know how much you're saving, and you have to see the numbers in order for it to make sense. Absolutely. So if the numbers work out and they want to pay the fee, then I'll help them. But most of my clients are, attorneys, medical professionals, and consultants that I work with a lot.
Okay. Now, how long does it take, this tax planning thing? Like, is it like monthly, or is it like, I don't know, like, how does it look like? Like, you have a conversation, or what's going on?
It's an annual thing that, once a business owner wants to move forward with tax planning, and, they say, yes, this is what I want to do, and collect information, then we develop the tax plan. Mm-hmm. Once we develop the tax plan, tell them these are the, the 5 strategies that you can implement. These are the amount of money that you have to move and so forth. Then the ball is in the business owner court to actually come and do it. So if we're implementing it for them, and so for instance, we say that, you have to move, say, $100,000 to a different entity, like, to a C-Corp or something like that, and they don't do it. So, they have to do what you say, actually.
Okay.
And that's how it works. So if they don't do it, so it's not a monthly thing or anything. It may, from like a time investment from a business owner, probably like maybe 5 hours total. Mm-hmm. It's just for them to call who they need to call, move the money that they need to move, get on the phone to discuss the strategy, and make sure that they have all the documentation in place. And, the implementation are things that, we also help them with, so that they have everything in place. But, I'm not going to go in your bank account and move your money for you. So, you have to go.
So what is the, realistically speaking, the timeline? You start working with these people at the beginning of the year, or anytime during a year? Like, how does it work? And then what's the timeline? Like, you work with them for how long? Like, what's the timeline like?
The timeline, so for any tax plan, it can just be like a 4 weeks process. Most of that time is just, waiting on information, get things to get to approve, monies move. So like, for instance, I start working with some clients in February on their 2019 planning, just because they already know that they're going to have pretty big income in 2019. So what that happens is, like, you'll check in on a quarterly basis to make sure that things are being done.
Gotcha.
So the check-in is to make sure that, hey, we talked about, you implementing, say, hire your child. I use that as an example because, it's repeatable. Did you do it?
Yeah, totally.
But they have to do it in order for it to work. They have to move the money in order for it to work. So I got the quarterly check-in. So you can start doing tax planning at any time during the year, except for when it hit October, November, December. And the reason why I said that, because at that time you have such small window of time to implement. So there's some things that you can still do towards the end of the year. but at that time, it's just such a tight window in order to implement a lot of things that you need to implement.
And can you remind us again the dates when it comes to regular tax filing and the extension tax filing for businesses and individuals? What are the dates so people know? In the United States, we're talking, obviously.
Yes, so I think when you're filing a return, like your 2018, your last year taxes are they need to be filed in 2019. So I think now you have, if you have like a corporation or an S corp, then you're due actually September 15th. And if your personal return is due October 15th. So those are the extended deadlines.
Those are the extended day, and the regular day is April 15th.
March 15th and April 15th. So if you own a business, then your corporation or your S corp, then you're March 15th. If you're filing your individual is April 15th.
Ronica, I want to ask you this question because this is something that many immigrant entrepreneurs are interested in. When you starting a business in the United States, they are thinking to either incorporate C-Corp, because as a foreign entrepreneurs, they cannot do S-Corp. So either C-Corp or LLC. Can you tell us the main difference between C-Corp and LLC, and what is better for individual who is just starting out business in the United States, foreign entrepreneur? What's the better structure for them?
Yes, you're right that, they can't do S-Corp, just because of the foreign status. And normally, there are two things, three things that you're going to look at to see which better. One of them is legal protection. Of course, what the level of asset protection and so forth. Taxation. C-Corp has double taxation, while LLC doesn't have double tax.
Let's explain that. People don't know what that means. Double taxation means?
Double taxes means that you pay taxes on the same money twice.
Don't do C-Corp. That's why I tell people, don't do C-Corp unless you have to.
You pay taxes on the money. So you pay the company pays taxes on the money, and then when the money comes to you, you have to pay taxes on your, whatever, non-resident or whatever type of taxes that you file, and there may be, withholding tax or, based on, visa. And I mean, when it comes to, foreign individuals moving to the States, like their tax situation it can get to a very complex level.
Oh yeah, very complex, especially when we're dealing with entrepreneurs, business owners running companies in other jurisdictions.
And others, yes.
It's very interesting.
Right. So, a lot of them, I would say, want to do C-Corp, if they're going to have, additional investors, if they're going to have branches outside of the United States and so forth. So those are the ones that I see doing C-Corp. But you have to really think about, how much money is going to be coming in, because big companies that are C-Corp, it's kind of like, they make the business pays the taxes so that when the money goes to the owners, the owner also, have the amount of cash to pay their taxes as well. So it's already planned for in their pricing and everything, how much taxes. So they have to make sure that.
So C-Corp is for big bucks, and for people who really, let's simplify it for our audience, people who really want to, for example, raise funds, and they are about to raise funds because they are going to give away equity. They're looking for VCs, angels, and so on. If you're not in that category, don't bother, guys. Just go simply with LLC, limited liability company.
And even some companies that are raising funds, they can go with LLC as well, because, I work with, some new, companies that are raising funds, and they are actually, LLCs.
They have LLCs, okay.
And they can give their investors equity through giving them percentage ownership in the partnership.
Correct. And by the way, LLC can be taxed as C-Corp as well. You can choose the way you want to be taxed: partnership, individual, C-Corp, right? So that it's so flexible. Now, when it comes to state, where to incorporate, what is your opinion on this?
Well, that's a big question as well.
Let's just answer it if you can, in a short, sort of simple way for people to understand, because these are usually the most frequently asked questions, we are getting.
I think that, if you move here and you live in a state, to go ahead and incorporate in that state, and then once, incomes start coming in, then you can analyze if, moving your headquarters to a different state is going to be tax beneficial, because the only reason people do that is just from a tax incentive.
Yeah, like, we have Delaware, Wyoming states, most
right. So the thing with those states is that those state doesn't charge you an income tax. But the problem people get into, maybe your home state charges an income tax. So even though that state don't charge an income tax that you're started in, your own state kind of pulls it in for you to pay taxes on. So sometimes the benefits are not there if it's not done properly. And sometimes, but a lot of like large companies, they start their headquarters in these
Delaware and so on.
Delaware, Nevada, and
Wyoming.
But they do the planning around it so that the taxes that they're trying to avoid doesn't get called back to the state that they operate.
Maybe these days we have like this digital nomads, digital nomads, people really who travel frequently, and they don't necessarily have a tax domicile. They are not in one particular state more than 183 days out of the year, so they literally are homeless, internationally speaking. And those people, I always recommend to simply incorporate in, for example, Delaware or Wyoming, where you don't necessarily have to deal with the other taxes, like Ronica said. And the purpose is that, especially if you're an online business and you don't even spend 183 days in the United States, and there are many of them these days, many of these digital nomads, why I keep saying nomads, you know what I mean? Like, so for these people, I always suggest go with Delaware or Wyoming, but I prefer Delaware. So what's your input on that?
Yes, normally, one of the things is that the states are getting smarter and they're trying to go after different types of income. So if they meet those requirements, yes, go ahead and, incorporate in one of those states, especially if you're not completely living in the United States. But, of course, they just have to make, because, even though those states don't have individual tax, they have to also check that those on the corporate tax side to see how much they're going to be liable, from a corporate perspective. Like, Houston, Texas, they don't have a personal tax, but once your company start making a certain amount in revenue, then they start, not even profit, revenue, then they start charging tax.
So
those are the little nuances that, I think that they just can go ahead, incorporate, make it easy, pick, Delaware, as I said, that it's easy to incorporate more in Delaware. Do what's easy initially to start. Once money start coming in, then you can sit down with someone and
and then you can
those things around. So it's not they don't have to stress yourself out at first, I'll say.
At the same time, I would say you don't have to stress yourself out, and yet you should discuss the matter with professional. And this is what I always say to people, because it's all connected. It's like building a house. You're building weak foundation, and then you start building, you're in the middle of the building, and then you want to go back and change the foundation. I mean, the house is gonna just collapse. So again, this is foundational. These are foundational things, and people, sometimes people, they are like, oh, I'm just going to incorporate myself. I don't know what I'm doing. I'm just going to pick this state, And sometimes they even pick the state based on the way it looks. You know what I mean? You will be surprised. You think that being incorporated in, I don't know, California is so cool on paper. I'm gonna put the address of California to my website, and I'm gonna look so cool. I'm like, are you? I'm not going to use the word kidding me. People just don't think, they don't think things through properly. And then, they start, working on their business, and then they're like, oh my God, now I need to restructure. And these things are also connected with even the investor type of visas that I work on, the filings and so on. So you really have to be careful. Like, you need to know what you're doing from day one. That's my opinion.
Exactly. They have to, I always recommend speak to someone. If they want to be a jack of all trade and do it themselves, then that's when I'm like, well, do what's easy.
Don't be people. Don't be jackish.
Exactly. Like, go speak to someone. If you don't want to speak to someone, do what's easy. Do it in your own state, and then go talk to someone, afterwards. But the best thing to do is go talk to someone, and don't try to go register things all over the place for yourself. And people also think that it's super cool to have all these LLCs all over the place as well. And I'm like,
really? They think that? That's ridiculous.
Yeah, I have a lot of business owners that they want all these different like
For LLCs, right? They can look cool because they're running multiple companies.
Exactly. So I really don't get why people want to complicate it. Speak to someone.
That's an interesting thought. I do have a question on that. Let's say you have an individual who is running multiple LLCs, and this individual wants to be taxed. The individual want to be taxed as an individual because it's a single member LLC. They have like maybe 4 or 5 LLCs. Like, how is that done? Like, are these people being taxed as an individual even though they have like multiple LLCs going on? Is that possible?
Yes. So normally, if you're LLC, then the individual is a person who gets taxed. So if you have normally I recommend if a different business have a different LLC. If you have a business operating. I'm talking about the people that don't have a different business operating. They just want to open up all these little dummy companies.
Like if you have different business types, obviously you don't want to do it on one LLC. You preferably want to have a different LLCs, and you want to have a different corporate accounts, right? You don't mix and mingle these different sources of income.
Because and then for legal, the business attorneys will tell you that there's piercing the corporate veil and so forth. You don't want to miss personal with business and business with other business, because if there's something legally that impact one business, it can spill over to the other business. And from a tax perspective, you don't want issues with both business. So if you have 2 separate type of business, keep them separate.
Keep the corporate account separate, and yet you will be taxed on an individual level, like an individual, correct?
Yeah, tax, and it's now with the new tax law, there's pretty good savings for business owners. So the best thing is that once they're doing some planning, that there's pretty good savings. So once the income comes to their individual return, then they can save some more money.
That's good. I love it a lot. Cool. I think, Ronica, there is going to be a last question I have, because then we have to wrap up. I know you're busy and I'm busy. We got to go. When it comes to the income levels, 100K, 300K to 1 million, what these individuals who are making, let's say 100K, 300K, just like we came up with these levels, you and I, but they should be aware of, what they should think, what they should consider if they are already making 100K, if they are making 300K, and someone who is making between 300K and 1 million. What are the considerations to take?
At the first 100 up to the the 300K mark, and then to the million, I think that entity structure becomes important, and we just talk about that, right? Entity structure. So one of the things that business owners should know, that sometimes you can start off with one entity and it fits you up to a certain income level. But if your provider is recommending a different structure just based on because your income is so much higher, that's not unusual. It doesn't mean that the person before did something wrong. It could be, but not all the time. So the entity that you're doing business under becomes important at that time in order for you to shift income. Sometimes you may even want to, even though it's one business, you may want to even split them into 2 different businesses just in order to take advantage of the different tax rate under a C-Corp or LLC and so forth. So the entity becomes important. When you're a business owner, you start making your first 100K, and so for instance you don't have a lot of overhead expenses, then you want to make sure that you're gonna if you qualify for the S-Corp, go ahead and do the S-Corp. If you don't qualify for S-Corp, then you have to stick with the LLC, never a C-Corp at this point. So, make sure that you're getting as much, reimbursements as possible, tax-free reimbursements, from your business. So I think that would be one of the number one thing. The more reimbursement you get, the less money that you have to pay in taxes. When your income, start increase, it's more when you have more cash flow to get into more, advanced planning, where you can think about, maybe I need to move income to a different entity. Do I need a holding company? Do I need to, reinvest money in, different plans? Do I need to put money away from retirement? If I have a family, can I afford to hire my child and shift some income? It's like, that's when when you start getting up to 300 and, there's more cash to play around with, then that's when, that's when you're going to see the 50K and, the 60K reduction in taxes, because you have more cash to move around because the cash actually has to get moved.
Love it. OMG. I love this. Oh my God. It's so good. And it's at the same time, it's complex. So I'm like, what?
It's
but
all about changing the facts. So
why do you love the last question really? And then we're going to wrap up. Why do you love tax planning and this topic, taxes, so much?
You know, honest story, I hated taxes in college.
And then what happened? Like suddenly...
taxes in college, I went to work, and we're at work, and these CPAs from these large firms used to come in, and they used to help, you know, the corporation I was working with, the tax plan, and it blew my mind, some of these struggles.
Yes, I love it. I loved it. I mean, I love hearing you. I love what you're sharing here today, because
oh my God,
because you are so passionate about it, and you know, it's really like your energy that we are all buying into. And if you are so passionate about taxes, it's because it's a crucial part of our life and our business.
Exactly.
That's like, for me, it's like uplifting, honestly. It's
and
just,
that's why I say it's a mindset thing, because you know, the big companies and, you know, super high net worth individuals, they know that it's an opportunity to make them money.
Yeah.
You know, their taxes in probably like most of the countries around the world. You have to pay taxes.
Totally. I love it.
So they take it as an opportunity to make money. Like there are like some great things that you can do that can like double, triple your net worth.
What?
Deductible and things like that.
Monica, we gotta talk. We are talking soon. You and I. Okay.
So that's why people, you say that, you know, the 1% and rich people, they don't pay any taxes, they don't pay their fair share. It's because the very reason that they take advantage, because the one thing that if any business owner want to take away from this is the IRS specifically written the tax code to benefit business owners. They want businesses to grow, because that's what basically created the growth of America, right?
The country is based on immigrant entrepreneurs,
business owners, right?
Yeah.
Because of that, and because that's what you know, everyone knows that entrepreneurship is what basically increase, you know, quality of life and you know, the U.S. economy over the years. So the tax code is written to give businesses incentives to grow. Yeah,
and that's why I do what I do. I'm bringing people who are entrepreneurs to this country, and like, because we are the future. We are the future. We are here to change the world. In other words, like, I truly believe that we are game changers. Period. So thank you so much, Ronica. This has been amazing. Brilliant, Ronica / game changer.
Thank you. It's so easy to talk to you. You pulled out a lot of ways of saying things that I've just never even thought about.
I love this. We gotta continue the conversation. Let's see what people gonna think about this interview. You guys can leave a comment below, and if you want Ronica back, let us know and just comment below, and then we can do maybe part 2 of this interview, because I really enjoy it, and super informative. Thank you so much.
Thank you. Have a wonderful weekend.
Thank you so much, Ronica. Talk to you later. And guys, thank you so much for tuning in. Make sure to stay tuned for upcoming videos, and there is going to be a playlist somewhere here that you can actually watch a bunch of different videos, informative, especially if you are aspiring entrepreneur who wants to move to the United States. So stay tuned for upcoming videos, and I'll see you later. Bye, everybody.